But if you look at the fact that the 3-month 10-year yield has actually inverted since May, is the Fed worried about that? Is it like an impending recession? Is that what they're looking at more than the labor data?
I don't know. The message out of the Fed has always been, or for a long time been, that we shouldn't be so worried about the inversion of the curve. There are different issues at play now. I never really bought it. I mean, it is a pretty good predictor for recessions, right? So, and the Fed cannot prevent it from happening. They can cushion the blow, in a sense, by coming out early. And I must say, if they do go ahead, as it sounds like they will, in terms of cutting, they are earlier in the cycle in starting the cut that they've done in any of the previous downturns that I can remember. So that will help cushion the downturn. But you're right. You also refer to the labor data. All the probability models we have, or I'm aware of, on recession probabilities driven off labor data are all flashing red, right? So we have lots of reason for them to start to become more dovish.
Okay, but is this with the trade war that's here to last? We heard from Mr. Kudlow yesterday that actually they see the talks seem to be back on track. If the specter of worsening trade tensions gets taken off the table, what does that mean for Fed policy?
I don't think it means anything really, because the Fed cannot run policies depending on Trump's tweets about now we're on again. Trump's trade show is a TV reality show. Week after week, we get another one. Now we're on, now we're off, now we love each other, now we don't love each other, now nothing's happening. The underlying problem is the guy is a protectionist. He is out to change the world the way we had been working in a multilateral way and putting trade infringements on. That's bad for growth. Central bankers know it. And that's why I think it's the key reason why we have seen the change in tone from the Fed and from the ECB, because they are getting nervous about this. They can't quite say it. That's the problem.
Okay, but if the Fed cuts, is it one and done?
No, no chance, no chance. I mean, yes, this insurance idea, but this is not the way it works, right? I mean, can you ever remember that you've seen a weakening economy and you do one and then you're done? No. If they start, or when they start, and they will start, whether it's that month or the next, they will start. Our guess is they'll do 4 cuts in all, but the risk even to that is more rather than less, because that's the way it operates.